Good morning, everybody. Happy Monday. We have an amazing show for everybody today. What do we have, Krystal?
Indeed, we do. Lots of things that are breaking this morning, including the second largest bank failure in history unfolding as we speak. We have all of those details for you. Also, some bombshell Epstein revelations. Noam Chomsky, I don't know what's going on there, buddy. We'll talk about all of that, not to mention his meetings with a CIA chief. Not really that surprised about that one.
Yes.
We have an incredible video of a Biden voter really struggling to say exactly why she supports him outside of opposition to Trump. We have some pretty remarkable revelations, new revelations about Supreme Court corruption, these involving Chief Justice John Roberts. And we have the best and worst for you from the White House Correspondents' Dinner. We will react to that. And actually, I'm excited to talk to our guest today, who has a report about very key meeting in the run-up to 9/11 and exactly whether or not the CIA may have had some involvement that they have been long rumored but downplayed, etc. So we'll get into all of that. But before we do any of that, a bit of a visual revelation for you, update about how exactly our studio build is going.
Yes, that's right. We want to thank all of you, our yearly and lifetime members. We have our executive producer, Griffin, here. He's going to show you and bring you guys inside into what you are helping us
This is what you have been helping us get.
This beautiful box of lights is one of almost a dozen boxes that we have here in the studio. They cost tens of thousands of dollars, but lighting is everything. As on top of all of the materials and the new fabrication, the new set, everything that we went for was to exude the highest level of professionalism possible. I think this will rival any set in the entire news business. And I just, again, want to thank all of the yearly and the lifetime members, Krystal, who have signed up, who are helping us. This is the biggest expense ever in the history of Breaking Points, and it's costing a hell of a lot of money. But the reason that we are doing it is because we know how important it is, not only to you to have something that looks and feels important, but something that you can share with your friends and your family, and it will help us grow in the future. You guys are investing not only in us, but really in the entire community by helping us with this. So if you can, breakingpoints.com, helping us in our little cash crunch here as we have to shell out all the bills for these beautiful
Thank you
boxes.
for making this box possible, by the way. You know, this is a big investment for us, but it's one we really believe in terms of upping the professional quality of the show. This is something we've been committed to since the beginning of Breaking Points. When we launched, we only wanted to do it if we could do it the right way and continuously improve with your support. We believe in you guys. We believe in the show. So thank you, thank you, thank you for this box and the many more like it. And can't wait for you to see the full set. I think you'll be as excited about it as we are.
That's right. We're going to be taking premium members more on the inside and all that. So another incentive to sign up if you want to know the inside process, etc. But with that, we're going to go ahead
give us a second. We'll get this off the desk and we'll get on with the show.
So we'll see you in 1 second.
So the biggest news this morning, as I mentioned before, is the second largest bank failure in history. This is First Republic Bank. Let's put this up on the screen. They have now been seized by regulators and sold to JPMorgan Chase as part of the deal. 84 First Republic branches in 8 states will reopen as JPMorgan branches on Monday. Let me read you some of the details here. This is courtesy of the New York Times. They say regulators seized control of First Republic Bank and sold it to JPMorgan Chase on Monday, a dramatic move aimed at curbing a 2-month banking crisis that has rattled the financial system. First Republic, whose assets were battered by the rise in interest rates, that Fed rise in interest rates, has struggled to stay alive after 2 other lenders collapsed last month, spooking depositors and investors. First Republic was taken over by the Federal Deposit Insurance Corporation, the FDIC, and immediately sold to JPMorgan. The deal was announced hours before U.S. markets are set to open and after a scramble by officials over the weekend. Later on Monday, so happening today, First Republic branches will be converted to JPMorgan branches. This is all happening like this. JPMorgan will, quote, assume all of the deposits and substantially all of the assets of First Republic Bank, the FDIC said in a statement. They estimated the insurance fund would have to pay out about $13 billion to cover First Republic losses. Put the next piece up on the screen so we can give you some of the backstory of how we got here. So last week, we learned that First Republic lost $100 billion in deposits during the banking panic. So this is basically in the wake of that Silicon Valley Bank collapse. People freaked out about First Republic Bank primarily because they shared a very similar wealthy Silicon Valley clientele with a lot of uninsured deposits. And most of what fled the bank during that period was those uninsured deposits over $250K. After people, similar clientele, watched Silicon Valley Bank collapsed, realized that there was a similar interest rate exposure at First Republic Bank, bank, and those customers pulled about $100 billion in deposits out of First Republic Bank. The bank management has been trying to hold on. They had a huge infusion, $30 billion infusion from the other major banks in the first quarter, hoping that they could keep it together. But after that revelation of just how much of the deposits they had lost, the stock completely fell off a cliff. We have that for you as well. You can see what it looked like, lost over 90% of its value. Put this next piece up on the screen so you can see the chart. This is the year to date. So you see things are going along okay. And then where you see that initial plunge is right around the time that, you've got the situation of Silicon Valley Bank. And then in recent days when you had the revelations about how big the deposit losses were, you see another plunge. But obviously the stock had been getting hammered for some time. And over the weekend, we kind of knew this was coming because the government had solicited bids from JPMorgan Chase and a number of other banks. It's also worth noting here, Saagar, that JPMorgan Chase now, this bank, it was already a behemoth. It's going to be even more so. I was reading from the Financial Times, if they were to win, it would need the U.S. government to actually provide an exception to a rule preventing any bank from making an acquisition providing it with more than 10% of all U.S. deposits. JPMorgan, the nation's largest bank, is already above that cap, so they would need another exception in order to do this. And of course, it would put CEO Jamie Dimon at the center of a national banking crisis for the second time in 15 years.
For me, my takeaway is that 2008 was all about making sure too big to fail never happened again. But the de facto policy of the U.S. government and financial regulators since 2008 has basically just been to enshrine too big to fail and make it so that these massive corporations, the JPMorgans, the Wells Fargos, and those other financials, Citibank and others, are so big that they basically become infused with the state, and it's like a quasi-state policy. On top of that, you have several regional banks, people like Silicon Valley Bank, First Republic Bank, where it turns out, though, that the regulators were totally asleep at the wheel with those. And so what happens when they fail? They get rolled up into the behemoths. And now, it's a catastrophe. How can you have a guy like Jamie Dimon, and it's not even just about Jamie Dimon, how can you have a single financial institution be in charge of 10, 15, 20% almost of all of the deposits in the entire nation? That person is, frankly, even more powerful in some ways than the U.S. government in terms of what they can
he gets treated that way
policy,
too, by the way.
Of course he gets treated that way. An overnight change in their interest rates or savings policy or checking policy impacts tens of millions of Americans on an instantaneous basis. Could literally change the entire U.S. economy. They're not idiots, and they know that as well when you consider the top three banks in the entire country. So the problem has been is that we've moved to more corporatized banking away from some of these smaller regional banks and credit unions, which had ties into the community. They were willing, evolved in such a way that they had a real relationship, I think, with many of their depositors, where we are now moving to an overall corporate umbrella. And it's really troubling too, because how did this happen? Why is this the second largest bank failure in history? It's not just about irresponsible behavior within First Republic Bank. It's also a tale about interest rates. And that's an interesting question too, where the people who are interest rate proof are the too big to fail institutions. And then the little guys like Silicon Valley, I'm not justifying their behavior, but we should bear note that the reason that they failed is 100% because of the Federal Reserve.
There's actually a new Fed report looking into the failure of Silicon Valley Bank that we're going to get to in a moment that points the finger in all directions. Failure, the rollback of regulations, Fed regulators, especially the San Francisco Fed folks, Silicon Valley Bank president sat on the board of, by the way, their failure, the bank's failure. So I'll get into those details in just a moment. Before I get into the bigger picture here, I think it is important to understand some of the specifics of what happened. As I said before, after Silicon Valley Bank fails and you have the same very wealthy clientele with their asses out with huge uninsured deposits at this bank, they pull their deposits like crazy after Silicon Valley Bank fails. So that's one piece. The other part of this is this bank's specialty was in very large, low-interest mortgages. So again, that's where the huge interest rate risk comes in from them. And that's where the Fed policy of continuously hiking rates, even in the wake of the Silicon Valley Bank collapse, ends up hammering them to the point that, their balance sheet is a disaster and a mess, and there's no way that they can recover. So it's those two pieces coming together that led to this collapse. I also think it's important to note, in terms of broader contagion, it's early, but it does look like Signature Bank, which was that like crypto-aligned bank that failed, Silicon Valley Bank, and First Republic Bank. It seems like these three were sort of outliers in terms of their exposure, in terms of their clientele, in terms of their concentration in one industry, which created additional risks for them. It doesn't look like the rest of the banking sector is directly impacted by these particular failures. But again, it's early, and I'm going to tell you, we also have some warnings from Charlie Munger about some other risks that may be going on for banks in terms of their balance sheets. I'm also taking a look at the markets right now. This is per CNBC. Dow futures are flat. There was, I think, sort of an expectation that this was probably going to happen. That was already sort of priced into the market, so not a huge market reaction here either. Now, in terms of what this means for our banking sector, what it means for too big to fail, Kyle said this to me, and I think it's true. It's like, well, whenever capitalism fails, socialism's there to like backstop it and prop it up. But it's not just that the big banks like JPMorgan Chase are too big to fail. With Silicon Valley Bank and Signature Bank, now we de facto have a policy that all banks are effectively too big to fail. So you've got Jamie Dimon sitting now on top of his own massive, incredibly powerful empire, making tons of money himself, his executives, shareholders, whatever, and with the implicit backing and guarantee of the U.S. taxpayers. So it is the definition of privatize the profits and socialize the losses. And far from fixing this problem after 2008, we've actually just expanded the definition of too big to fail to be throughout the entire banking system.
Yeah, actually, if you even read Dimon's statement about why he bought First Republic, quote, "Our government invited us and others to step up, and we did. Our financial strength and capabilities allow us to develop a bid to execute this transaction." And in fact, they are taking no losses on the transaction. It's all upside. It's basically just like what happened in 2008 when Tim Geithner and the other regulators got involved, called Jamie Dimon up and said, "We will guarantee basically all of the downside, and we will make sure that you have only upside." And how did that work out for them? It worked out incredibly well. So, it's a nice business that you can get into where you can make dumb decisions. And look, government policy, it impacted us, our bottom line. It impacted every small business in the entire country. Nobody's coming to save us. If things go down, what we have to do is turn to the people who support us and, do better business and say, hey, please, this is the thing that we're in, and you have to make tough decisions. None of those appear to apply to the banking sector. And I think that's crazy. Why don't they just get to do business like everybody else?
Yeah, I think the Fed context here is really important because there were specific risks with these banks, who were irresponsible, made bad decisions and, put themselves in a very precarious position. And they're pushed over the edge by a Fed policy of hiking rates that hasn't even directly impacted what it is supposed to be impacting, which is bringing inflation down. Why? Because the Fed policy, as we've discussed many times before, but it's always worth reiterating, this is designed to bring wages down and unemployment up to kick people out of their jobs, but it actually doesn't get at one of the most key pieces of inflation, which is the way that corporations have used their market power in order to lift their prices and price gouge consumers. It deals nothing with the supply issues that we have, for example, in the housing market. In fact, it's creating some additional issues in the housing market because of the way mortgage rates have gone up. That's kind of created a freeze in the market that has kept prices from going down significantly. So that policy is, underlying a lot of the turmoil and chaos that you're seeing in the economy right now, and specifically with these banks. Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.